Hello, Warriors. Who's ready? How you doing, Brock? I don't know what to do with Euro here. I mean, it's a negative week. I'm still live on short yen, so if the dollar weakens, I'm still there. But that's a pretty ugly week. So, I may think about fading dollar strength. What I want to talk about is, look at this. So I know the yen's had a great week and, maybe it's going to blow again, but here we are testing this, was a false breakdown. And then, I was getting short up against it again. This is a key pivot. But what was really interesting to me is, the yuan pulled back enough this week to generate more risk on, and maybe it was a Chinese injection, but look at this. So here we go with the yuan. It looked like we had, we were closing above 7 or poking our head above it last week, and all we did was pull back to support this week. Hey, Sean. And we're threatening to break out, it's a flag. Are we going to do A, B, C first? But this is a breakout if it happens. Here's the weekly. I mean, if this doesn't look like a flag, I've never seen one, although the flagpole is weird. Maybe it's some kind of triangle. But, the news out of China is not getting any better. Well, I think if this breaks out, it's risk off, or at least, puts a damper on risk. And in fact, we have, my reason for still thinking the yen has downside is I still am a believer in this breakout that we had in TLT. And all we've had is a little pullback. I still think we're going to gun for the highs. And I also still think that even though we got a bounce from being oversold in the 10-year, to me, I'm not convinced this is a bottom. It is a higher low, but I'm still looking for new lows and yields. And I just think that if that happens, it's not bullish US dollar yen. Okay. US dollar yen. Yeah. But the key technically, I mean, you could have an idea and a narrative and correlations and everything. You still need what? You need price action, right? So I'm looking at that price action in the yuan and I'm going, it's not going to be, the market does not like the yuan weakening, and neither does our president. But here we are right here. So this might be 78.6, 88.3 back here. And maybe, I thought we already took care of the stop hunt in the end. There aren't as many people short now as there was with continual failures. So I'm talking a little longer. I'm dribbling because Blake is taking care of some personal things. But anyway, here's my dribble. So I always felt we were going to take this high out. I thought so here. I thought so here. I was amazed that it didn't. And then we finally had it, and, was kind of a stop hunt. And it sure looked bad last Friday, just like the market. 107.70. Yeah, that would be what? 1.618 from here. So I think if we go to 107.70, if your number is there, Raj, that will flush this low. Okay. Actually, if I'm right about new highs in bonds, I wouldn't be surprised to see 61.8 and this speed line here achieved. And they come in together right around that. Whoops, what's that? 106.68. So write it down. And, even though gold's down today, it held where it had to. And that's another thing. I still think that they could, I know the commercial setup, and this is a pretty lousy week. Okay. So we'll see what happens with gold here. Steve showed a nice chart yesterday that if you wanted to short it, I think he had some type of check of a wedge. You could ask him when he gets in here. That this would be the rally. 75?
1570 to 1575
Okay.
is the area I gave, yes.
Okay, so here's the 50-day and the 4 hours containing it right now. So everyone get ready for the number. I'm going to let Kung Flu. Can oil? Oh, thank you, Sean. I hope you caught some of that crude. How you doing today, Blake?
I'm doing all right. Just dealing with
yeah, you have a good immune system.
Yeah, well, for now, yeah. Let's
he has enough of a vitamin C.
Yeah, 10,000 milligrams a day.
I take a lot of vitamin C and avoid my wife like the plague. So,
yeah, that's only when she's sick or in general?
No, just in general. So we, it's non-farm payroll day. Obviously, it's a hell of a day for some volatile market activity. And so I guess what I'm going to do is I'm going to cover, like probably what you would expect going into non-farm payroll and with the stock market at all-time highs. I'm going to give you just a real quick rundown of like the S&P here, and then I'm going to go talk about the yen and the euro and where we're at. So, the cable's hitting highs right now. The S&P is trading in a bull flag pattern. You can see it right here, and we are still in breakout territory. I mean, we're there. We dipped a little bit below. People probably were thinking in Europe or last night that it was like, oh, hey, look, we got a false breakdown. But in all actuality, we're just still building a flag, which is a bullish indication. And it's not a guarantee that we're going higher. It's just, it is the odds are tilted towards a continuation. Now, my 2 cents here is if we do break, let's just say roughly, I'm going to give you a rough estimate here, roughly about this 3320 level. That is where we're going to start to see, the stock market, move lower. Now, you could make a case either way that the market could go up or down, because what we've seen, stronger non-farm payroll means stronger market, stronger stocks. Weaker non-farm payroll means the Fed's going to stay looser for longer and the stock market goes up, period. Okay, just goes up. Now, if if the jobs number comes in really strong, okay, you'd probably could argue, that the market's going to go higher. If it does come in weaker, I don't really buy the argument that the Fed's going to stay lower for longer, because I think we're at full employment. So I think if the employment picture actually sours, then you are going to start to see a little weakening of the stock market. People go, well, maybe the labor market's going to roll over here. But I'm not here to guess. I'm just here to just realize that, hey, as long as we're above 3320, probably going to be bullish. But if we break below that in any meaningful manner and stay below it, then I'm going to start to think, okay, maybe we had a false breakout on a strong number, which, by the way, everybody's looking for a strong number. One of the guys in our chat room, I believe it was Takis, he put up a bunch of numbers on different brokerage firms and what they're looking for. Everybody's looking for a beat. I mean, there's a couple that are looking for in line or slightly below, but for the most part, most of the big houses are talking a strong number. JP Morgan's desk is actually looking at 250, I think 256,000 is what their model was showing. I can't like argue with any of those estimates. I would think that we're going to have a stronger number today, but it's going to be probably, whoops, I don't know why that didn't, let me refresh, hold on 1 second. All right, there we go. So, you know, the market's looking for 160,000 roughly. Let's see, Bloomberg has it at 165. Okay, so let me put that back.
You would think
So-
that Bloomberg, since he's running for president, could
Oh.
doctor these numbers to make
What's
them
that?
look. With Bloomberg running for president, Blake, don't you think he could doctor these numbers come the summer and fall to make them look weaker? You know, report them lower on Bloomberg.
You're very conspiracy theorist right now. I don't
Bloomberg
necessarily agree with
Bloomberg coach doesn't run the surveys. They only give estimates. So,
Oh,
you know, even if they give worse estimates, I mean, the actual numbers are not going to be affected by that.
Oh gosh.
So
go ahead. I'm sorry.
But let's talk about like the implications of a stronger number. So I still believe, and I know the dollar yen came off a little bit from the 110 level overnight. And I, believe it or not, I took a short in the dollar yen last night before I went to bed at 91. And you know, my stops are above this. I don't have them at break even. I just have them above here, and it's a small position. It's like, it's more of a, okay, I'm up a few pips, and you know, if I make money, great. I actually think I think it's going to be a stronger number. So the risk is that it's just going to break above these highs. Now, this is in my opinion, a risk of the dollar yen right now, and this is where I'm going to get a little bit more aggressive. And let me tell you my plan. This is because what I have on right now is so small that it's like, okay, if I get stopped out, it's like, you know, for me, it's a very minimal loss. But where I'm looking to be aggressive is not where we're currently at, unless we start breaking down. I mean, if it's a weak number and if it's just a weak number and we're like, holy crap, that is a weak number. How did that come out like so polar opposite of what we were thinking with ISM and everything? Then in that case, then we're probably going to take out these lows, take out the 60 level, and we're going to start heading back, you know, down towards the, you know, 109. Is that, would I add there? Yeah, I would. But this is where I really want to be more aggressive, is up here. So let's imagine we have a strong number. Let's just say JP Morgan's right. Let's just say comes out, we have a 250,000 jobs. It's strong number. We can't argue that. Dollar yen spikes up above 110 and starts taking out all of these, all this resistance, you know, all 110, 110.20 through here, and this starts happening. Well, you got to imagine that you're going to get a lot of short covering through here. So I have to believe that through here, it's going to squeeze. And now what I'm looking for is a move to about the 110.80, because this right here is where I actually want to be on the short side. Now, let me tell you why. Because if we have such a strong number, let's just, you know, for argument's sake, just entertain me and say that, okay, Blake, we're going to get a really strong number. I think the dollar yen initial spike is going to be pretty explosive, especially if we break through the 110, and it's going to look explosive. It's going to get everybody really excited. But then the market's going to say, hey, wait a second, you know, if we have such a strong number, is the Fed going to continue to provide this liquidity? And then we might get a reversal after we hit what I consider channel resistance, a 78% retracement of this move. Okay, 78% retracement of, this would be the high in April of last year to the lows. Okay, that'd be a 78% retracement. 127% of the, well, we'll just call it the coronavirus move lower. That all comes in right around 110.80. So let me just say, if we reach for 110.80, I am a seller up there today. That's where I want to actually be aggressive. My trade that I have on right now is more for just keeping me engaged in the position. It's like a tracker. It's, you know, a lot of times I do that. I'll put something on just, you know, right or wrong, just it keeps me, you know, engaged in watching it versus losing attention and focusing somewhere else. And that's kind of what I put on last night. I'm like, okay, we're close enough to resistance, or I'm only risking, you know, if I get stopped out, I'm only risking 15 pips, you know, once I get stopped out, it's not a big deal. So that's kind of what I'm doing right now with the dollar yen. Now the euro, let's talk a little bit about the euro. The euro has just been beaten up, and you know, there's you know, the guys in my office have been talking about the LVMH, you know, sale, and a lot of euro selling as a result. A lot of the Yankee bond issuance being issued, and that has taken the euro lower, and it's taken its toll on the euro. Now the euro's testing a 78% retracement down here. Obviously we're getting a little oversold. Do I think that the euro's a buy down here? No, I don't. And remember, I have to actually see this downtrend line to broken, this blue one right here, this one. Okay, I want to see that one broken before I even start, you know, with the idea of being long the euro dollar. I picked up the euro here at the, where was it, at the 50 level, yeah. As we were, you know, coming back down, I bought it here, and then I got myself out like down here. I'm just like, well, I don't want to deal with that. So
Blake, I'm sorry to interrupt, but have we achieved that head and shoulders top formation objective that a lot of people were talking about?
No, well, see, there's a couple head and shoulder patterns that people are discussing. First and foremost, I've always looked at this one.
Yeah, where you have the circles on top.
Yeah. So this would be the neckline, right? So that target actually comes in around 109 roughly. Okay, so to answer your question, no. But the other one that other people are looking at is this one.
Oh, okay. Well, that's much deeper.
Yeah. Yeah, and so this being the neckline, then you're talking about a move that goes down here. And those of you that know me know that I don't like trying to forecast head and shoulder patterns that don't have arms. So I treat it more as this is just a breakdown. But my targets become more elusive because it's not when I don't have an arm to follow. So in other words,
I don't like head and shoulders with dandruff on my formation.
Yeah, I don't like it. Me neither. Head and shoulders, knees and toes. You know, I'm so past that song. I don't have, my kids are too old now. But anyway, this one, if it really played out, it would extend way down here. But again, I don't like to play those because they don't have the forecast arm to play off of, because head and shoulder patterns are reversal patterns, not continuation patterns. That's something that's ingrained in my brain. So, but it doesn't mean it can't go down. I just, my projections become a little skewed. I don't look at it like a head and shoulder pattern. I look at it in a different structure. So anyway, as far as the euro goes, let me just reiterate. I'm not a bull, but can it bounce? Yeah, I think it can. And frankly, if we bounce back above like this, you know, 70, 80 level, which I thought was pretty big support yesterday, which we bounced from, but the bounce was very shallow. I still think that this area, because it's a previous support, it's going to be really good resistance back up. So if we get back above like 80 or 90, I think we can squeeze. What I think a better trade would be, personally, if you guys are euro bears, is actually shorting it up here. And this is what I talked about yesterday. I'd rather short it up here than try to sell it down here. And that still rings true today. I'd rather not be a buyer down here. I'd rather be a seller up here and then reverse it if it goes back above 110.50. That would be what I'm looking to do versus, you know, and frankly, I'm just not really trading the euro right now. I'm not, but a couple other pairs I need to bring to your attention that I think is pretty important. So the Aussie dollar. The Aussie dollar had a setup of an inverted head and shoulder pattern, minus last night's move. Okay, the RBA had their meeting minutes, and that between that and, you know, the coronavirus fears, the Aussie came under pressure, but you can see it was setting up an inverted head and shoulder pattern. And I was like, man, if we break above the 67.60, 67.70, I'm in. That's what I was thinking. I'm like, man, I'm game, but it didn't. It just rolled over, and now we're testing these lows here. The Aussie looks, and it's still trading very heavy and very weak. And if you look at the Aussie, I mean, we're at, you know, yearly lows.
Multi-year lows, to be exact.
Yeah, I mean, we're multi-year lows. This Aussie does not look good by any stretch of the means. So, you know, I am definitely in the camp that this coronavirus, and it may have peaked, and, you know, hopefully warmer weather comes, kills the virus, and it starts to die down. I mean, we're probably close to peaking. Hopefully it just, you know, we're just not passing it to and from everybody so much. But
the Aussie says differently, Blake. And you know what else does? I'd like to see your chart, because I love your charts on US dollar yuan.
I don't necessarily think that the Aussie says to me that China and Asian region growth is going to be hampered by this for a long time. And that, I truly believe, is going to be an issue. You know, you see Apple's supplier Foxconn, that, you know, is their biggest supplier, and they're making surgical masks. They're not making earbuds or ear things. They're not making those right now, and that is, I believe it's going to be a pretty big shift in, you know, China GDP for the next couple of quarters. So, and I think it's going to be a little bit bigger impact than people realize. And you can say, yeah, well, you know, there's going to be stimulus, and I agree with that, but I still think it's going to keep global growth kind of hampered. So I think the risk still to the Aussie is lower, and unless I see it technically, you know, until I see it, you know, show its or rear its ugly head technically, which would be a break above now 67.30, 67.50. You know, you have to believe that it's the path of least resistance is down, especially with this false breakout, this head and shoulder pattern. But it was a big false breakout above the 200-day. I mean, we are at risk to probably move down towards like 65 cents. And, you know, with the dollar as strong as it is, that wouldn't surprise me, because the dollar is wicked strong right now. And that can't go without saying. And the dollar index looks pretty good. Now, we are obviously, you look at the dollar index, we're up against, you know, a lot of high traffic zone area. So a lot of resistance is going to come into play, but still it looks pretty explosive here. And if you just look at like a quick AB equals CD, you know, just something that looks like this, I mean, you know, the dollar index might reach for 99 before it like really starts to, you know.
And you were right, strong equities was a strong dollar.
Oh yeah, I mean, strong equities equals strong dollar, and I have to reiterate that the euro is the biggest funding currency out there, and so in the event that the stock market actually goes down, you have to be really careful with dollar longs, in my opinion. There are certain dollar pairs that you would be able to play long, one of them being like the dollar Canadian, which, by the way, the dollar Canadian is threatening to break out. And that this dollar Canadian is going to move not on the merit of a dollar, the dollar index. It's doing its own Canadian thing. And if we go risk off, this dollar Canadian is going to go a lot higher. I actually think the best trade in a risk off environment is long euro Canadian, personally. That's just personal preference, because I know this is a big false breakdown, and the dollar Canadian rises with volatility typically. So there are certain dollar pairs that you can play in a risk-off environment. Dollar Mexican peso, we might have a big false breakdown here this week. Dollar Mexican peso above 19 would be extremely bullish. There are, you know, places that I would play the dollar long. There are places I definitely would not. You know, if stocks start going down, you don't want to be long the dollar yen. You don't want to be short the euro dollar. Cable's kind of doing its own thing due to Brexit. So, you know, I'm leaving the cable alone. I don't have a read on it. And I mean, if you can make, you know, 2 cents out of this price action over the last couple of weeks, you know, or last month, you know, I'm not willing to take a shot on it. I mean, yeah, we might come down to the 200-day moving average, but I'd rather play dollars through something that's a little bit easier to read at this point, and the cable is definitely not it for me. So anyway, those are my thoughts going into non-farm payroll. So just to recap really quick for you guys, S&P looks bullish while we're above 33.20. We get below 33.20, not so bullish. Remember, dollar yen threatening 110. A break above 110, I think, goes to 110.80. Hopefully, that's what I'm looking for. As far as the euro, you know, we could squeeze here, but we really have to get back above like 109.70 to squeeze a little higher. And if you look at equities right now, equities are blazing higher ahead of the non-farm because everybody's looking for a strong number, and I'm assuming that's what we're going to get. So with that being said, guys, if you want to chat with me throughout the course of the day or any of our other team members, make sure you join ForexAnalytix. It's only $1 for 10 days, you know, to try it out. Download the app, you know, and even if you take the light version, which is only $19 a month, you don't get the chat room, but at least you get the app and all the basic technical analysis. My analysis comes through every evening and then plus throughout the course of the day, obviously, but I recap everything quickly, all of our instruments at the end of the day. So this way you can kind of get an idea of what I'm thinking, even, you know, on your mobile device while you're out and about. So make sure you try us out. And with that being said, I'm going to turn over to my colleagues, Steve, Stelios, and Dale, so they can take you through the non-farm payroll. So thanks everybody, TGIF, and remember there's no daily roundup today since it is Friday and I've got to go tend to a soccer tournament. I'm a volunteer today, so
right. Good luck. Good luck on
parents,
both.
Parents get to volunteer because it's part of our job duties, I guess. After whatever. Okay.
Put the fix in for your your son, man.
Good luck, guys.
All right.
Bye.
Hey guys.
Bye, Blicker.
Hey guys, TGIF.
TGIF
finally there. So we'll have a couple of minutes. Now Blake talked about the Canadian. We have employment numbers out of Canada as well. And remember, the numbers have been pretty abysmal out of Canada recently. So I wouldn't be surprised.
At least 1.5 months.
Yeah. So I wouldn't be surprised if we get more bad data and the Canadian breaks out, but obviously you never know. Now, interesting numbers we had today. German industrial production, minus 3.5% month on month, and this was after yesterday's factory orders at minus 2.1%. Today's number is the worst number since 2009, which was right after the.
But everything is okay. There's no problem.
Right after the peak of the crisis. So this is not good. This is not good. Germany is definitely slipping. We've been saying this for months, but you know, and this is going to weigh on the euro for sure. And I mean, I saw the number, I just couldn't believe it. I know it's a volatile number, and now think about what's going to happen with the effects from China and from the lack of commerce, right, and of transportation on the back of the virus and everything. So I don't see what's going to turn things around right now, to be honest, and it does look pretty bad. What else do we have? We had French industrial production minus 2.8% month on month. Again, a very low number. Yeah, I mean, if you look at the history, you have to go further back than 5 years to find a more negative number. So it's really not looking good. On the UK side, we've had nothing today, so nothing to report on that, thank God. And really, the burning question still is what's happening with the virus. Are they telling us the truth? Is this the extent of it? You know, you quarantine some people, some cities of, you know, tens of millions of people, and then it's going to go away. I hope it does, but I am definitely not convinced.
You know, regardless of peaking and when it does, you know, the whole world depends on China manufacturing stuff. Okay, so
Absolutely.
there are things.
Yes, especially
things,
in low-cost products. Yes.
Yeah, so I mean, if there are things that you normally buy, at your Walmart, whatever, any of these stores, and you need them, it wouldn't be a bad idea to stock up on some extra in case production out of China takes some time to get back up to speed.
Yeah,
there we
true.
go.
What do you think?
225.
Okay.
Unemployment increased a little bit. I'm assuming that has to do with participation. I'm assuming.
Let's see.
Canadian number is a blowout number.
Oh, wow.
35.
Well, not a blowout, but it's big. It's good, yeah.
Last month's revision, though, is abysmal in the Canadian data, Stelio. It was revised down by minus 38,000. So non-farm payrolls better. US average hourly earnings weaker, though, once again.
Yeah, you're right about the participation. Actually, no, hold on.
Manufacturing payrolls, a very low number, minus 12.
So far, yen spiked a little bit above 110, and
yen is near the highs. You can see it here at the bottom right.
Yeah.
And the euro's gone 5 pips, so it's not really moving much.
Precious metals taking a little bit of a hit here. Crude still holding this week's lows by $1.
Yeah.
Gold
yen is not going.
Gold is like $3 lower. Following the.
I'm watching the 15-minute chart, and I'm getting a pretty good wick on the yen up here. I'm talking my book. Would love to see it under 109.70. And
listen, things with the yen are quite simple. Here is the long-term descending trend line resistance.
Yeah.
And you can see how close we are to it if we zoom in. So would you be buying here? No, I wouldn't. I can tell you that much.
But like they always say, if something can't rally with a good number, it's going to sell. I mean, I think it's a good short here with a very tight stop above the breakout. I think that's what I'd be
we're
doing.
fading right here. You could have like 10 pips. But anyway, also, my conviction about the yen is I don't think yields have peaked. Do you got? Bottomed. And
no, so far we don't have such a sign.
Yeah, I don't think so. So. And what I'd like to see is your lines on US dollar won, because just like it was something to monitor during trade war, it's something to monitor.
Resistance once again. You can see it here.
Yeah, it's trying to break out.
Yeah, and to be honest, this move lower has clearly corrective characteristics so far, right?
Yeah. So, if you what's that, a daily? Look at the weekly. It's even a tighter formation. And I remember Greg being on and him looking for new highs in the won over 720. To be honest,
that's what the chart points to. This chart really points to new highs being very likely.
Well, okay. So, that's that's a pretty good tell on what's happening in China. Forget even though it's the most important, the health aspects of people getting sick. It's saying, it's going to weaken the Chinese economy, and the yuan is the purest way to look at it. So.
Yeah, I hope Trump has no complaint about it.
Oh, he will. Are you kidding me?
Why? Why
They'll
would
call him a currency manipulator.
Of course he will, but the question is why would he?
They're trying to gain advantage.
Head
to
tails,
throw red meat at his
head
supporters.
Tails, you win. That game isn't played like that.
I know.
He claims that the US has the best economy of all times. If you have the best economy of all times, you should expect to have the strongest currency of all times, which of course isn't even close to true, right? But so you can either claim that you have the strongest economy ever, in which case you should be very content with a strong dollar. Because let's be honest, a strong economy should have a strong currency, and that is actually a good thing.
Steve, you're talking about being rational.
Yeah, sorry.
I'm here in the U.S. Okay, so I'm
not gonna make that mistake again. Sorry.
Okay. Anyway, rationally, you're right. You're spot on. In this universe, I don't know. Okay.
Yeah, true. Anyhow, to be honest, the reaction following NFPs is very, very tepid. Nothing is really moving. We saw an initial a little bit of a jump in the dollar, because the dollar, in the following hour, in the previous hour before the NFPs, had actually weakened a little bit. People probably were paring back their long dollar positions ahead of the number. Following the number, it strengthened a little bit, but so far the market isn't really reacting.
I would say look at the previous 2 Fridays. What happened? People don't want to be long risk into the weekend.
Into the weekend, yeah, because you never know what's going to happen within a couple of days and what kind of news you're going to get.
Exactly. So I think today we kind of grind lower in equities probably, and dollar probably follows suit.
Yeah, might be the case, Telio. Might be the case. A lot of people, especially this week, since this week had like 3 very strong up days. Yesterday was an up day as well, but not that much of a deal. So I'm assuming that people that were long this week, they have no reason to jeopardize their previous gains, to hold over the weekend. So I'm with you. I mean, we might see a little bit of a a risk off, but probably nothing to write home about. And if we go through the weekend and no big news comes out that might sour risk appetite for next week, we might see Monday stocks getting bid once again. People that might have closed positions jumping back into the market.
Yeah.
Full moon, guys, this weekend. Ow!
Yeah. Okay.
What are you smoking, Coach? Bring
It's
some when you come in, Greece.
It's medical. Medical.
Yeah, that's what they always say. Yeah. Okay.
It gives me perspective. All right.
Okay.
All right,
3D thinking, right? Any other news, Telio, that we had?
No, my wife is sick. That's news, but otherwise
Okay.
we're all good.
Okay. Kiss her for me. She's going to be feeling better quite soon, I'm assuming.
Yeah.
Same with my wife. So why don't we, let them hang out together,
Yeah. True.
the 2 of them this weekend, and we can do other stuff.
All right, bro. Thank you.
Okay. So let's go through some of the questions, because so far the market isn't really moving. So, there's no reason to really follow developments closely. Speaking of the pound that Blake mentioned before, the deal remains the exact same as we have talked about. So 129.20 is an important support area. We stopped there yesterday. We haven't broken below it today. I mean, I would still favor the possibility of another push lower towards 127, 127.50 before higher, but don't jump the gun as long as we're above 129.20. And being a Friday, it's not unlikely that we hold once again this support area today. So nothing really to do here. Now the Euro USD has weakened, rather significantly for its recent standards, which usually produces very small moves. But we are approaching a confluence of supports down here at 1.092, a little bit lower. We also have the head and shoulders formation target. So I wouldn't be jumping the gun and selling too much down here. Doesn't really seem like the right thing to do. Blake already mentioned the Aussie, which I wanted to talk about, because keep in mind we're testing multi-year lows once again, so that is definitely a bearish development. Add to that the fact that the Kiwi is not near that yet, but the Kiwi also remains strongly under pressure, currently testing a nice confluence of support. So let's see if we get some kind of rebound from here before we continue lower. But it definitely looks quite heavy. Now, having to do with the Aussie against the yen, I showed it earlier this week. I said that both the Aussie against the yen and the Kiwi against the yen have broken down from formations that clearly looked corrective as we were rebounding. So I assume that any rebound would be rather short-lived, and so far we're getting rejected again from 74.10 resistance area here in the Aussie yen. So I would expect so far it has played out exactly as I expected. I mean, I expected perhaps some support there, a rebound, a failure, and the continuation. So far this has been playing nicely. And here's the Kiwi yen found support at previous resistance area and the 50% fib, but we managed to hold after this initial rebound for like 2-3 days, and now we seem to be rolling over once again. So I wouldn't be trying to play the long side here, especially as you understand if risk, first of all, with USD yen being exactly at multi-year trend line resistance, and given the fact that who knows, during the weekend we might get some negative news about the coronavirus or whatever. You don't want to be holding these kind of pairs like Aussie yen, Kiwi yen long during the weekend, because they are of the type of currency pairs that bad news from China can really hit them hard. It's going to be like a double whammy kind of thing, because bad news out of China would immediately create a gap down in the Aussie in general, in the Aussie complex in general, and a gap higher in the yen, not the USD yen, the yen. So that would mean that, let's say we get some very negative news during the weekend, you can easily end up getting, like 100, even 200 pip gap lower in these pairs, and then you're going to be holding the bag. So I'm assuming that several market participants have such a risk in mind, and I'm not really surprised that, as you see, the Aussie yen and the Kiwi yen had been rallying / consolidating after the initial rally for the whole duration of the week, but they seem to be rolling over as we approach the end of the week and get to the weekend. So I wouldn't be surprised if we see even more selling for those two currency pairs, ahead of today's close. Now, clearly, stocks remain very well bid. I mean, they seem to be ignoring everything, but as Dale just mentioned before, people that were long risk this week, did very well. I mean, we had roughly 5% move higher. Now, would you be risking that over the weekend for random news that you cannot control? Probably not. So I'm assuming that people that are not, buying and holding for long periods of time, and they're in essence swing trading the market, I'm assuming those will be taking at least some profits ahead of the weekend as well. So that would probably make it rather tough for the market to soar higher ahead of the weekend. So I wouldn't be expecting that much. I mean, we might
that's a change, Steve. When you think about it, people had no fear of going home long into the weekends in equities for a very long time, and
I think they still don't have, coach. It's just the specific scare factor that has to do with the coronavirus. I don't think it has to do with their outlook for risks in general. So it's very, very specific. And thinking about it, like I'm going to talk now mentioning European hours. Okay, so you close Friday night, and then you open again. You have the market open again 48 hours later. 48 hours is like a long period of time, right? Yeah, it's a long period of time. I mean, who knows? Within these 48 hours, you might get like 2-3 headlines that, for example, the virus has spread in other towns in China, and then you also get some headlines that you got some new diagnosed cases in other parts of the world.
Shy Girl Tracy said, look out for India, because if it,
for example, so and then everybody starts thinking about it during Sunday before they open, and then everybody's like, oh shit, this thing is getting worse, just get me out. And then everybody's running for the exit Sunday night, Monday morning, and you can see like a big move lower. So probably people thinking about it would be like, shouldn't I pair back some of it at least today? So I'm assuming that's going to be the case. So I don't find it that easy for the market to really perform as well as it did during the previous days. I mean, Monday, Tuesday, Wednesday were very strong days. Yesterday, Thursday, ahead of the NFPs and closer to the weekend, we moved higher, but clearly momentum had already waned. And so far today we're negative. And as I said, considering that, I don't see how easily the market is going to have the fuel to to push higher once again.
Look at that glaring divergence. You can't find a divergence like that
no, it's a
for
huge
I don't
divergence.
know how long on a daily.
It's even worse in the Nasdaq, actually.
Yeah. I mean, when's the last time you've seen it where you haven't had to put your cursor on the RSI to make sure it wasn't making a new high? I mean,
it's not
with the naked
but,
eye, you see it.
But if you need an answer about that, the answer, and you're gonna like that, is here. Look at this.
Yeah.
Which was the end of the parabolic move higher we had.
And there was still a stronger RSI
at the end of 2018.
Yes, but you see the last RSI high was still,
prior to that, the January 2018 sell-off. Look at this. RSI was like at 85, and then the next high we got in March, RSI was barely at 70, barely, not even actually. Yeah. So these type of divergences, usually warn that this is not the place for you to be long. And look at the VIX. The VIX still holding. Yeah, still holding. So I have to say that from a risk reward perspective, it makes sense here to try to be on the short side.
You know what I've been telling people? Instead of, it's been much more painful trying to top pick S&Ps. But VIX keeps making higher lows and it's still in a breakout. So instead of needing to have perfect timing on the S&Ps because you're leveraged, why not just buy some type of VIX product that doesn't have big decay? Because it's been much more forgiving if you're a bear than trying to short S&Ps.
It is, especially if you want to hold it for a short period of time, let's say over the weekend, in which case the contango effect doesn't really matter because it's a very short period of time. I mean, it's minimum.
Plus, it's got higher lows instead of higher highs.
Then I agree with you. It's a good play because we know very well that VIX tends, in this bull market that we've had for years, tends to be coiling for a long period of time. And after that it tends to explode higher. So we are currently trading below 15. It's very, very easy to open the VIX at 20 or 25 on a Monday if you get some bad news. So you easily get explosive moves in the VIX that as long as we remain in this bull market, they're short-lived, having to do with duration. But still, if you're at the right side of the market with a good timing, you can make a lot of money by risking very little, actually.
And it closes under 14, you take a small hit and you get out of the way.
A very small hit, actually, yes. I mean, a minimum hit, yes. So from a risk-reward perspective, the VIX looks very, very appealing down here. I'm 100% with you. Now, we already saw the USD yen, and by the way, the USD yen has moved even a little bit lower, like 10, 15 pips, following the NFPs. So it remains a little bit under pressure. And as I said, the issue here isn't the fact that we have a little bit of a negative day. It's that once again we're very, very close to that long-term, multi-year descending trend line resistance. And really, from a risk-reward perspective, why would you want to be long against such a multi-year resistance? I'm not saying that we cannot break higher, but we haven't broken through that for years. I mean,
well, how about this too, Steve? It got better than expected news, and how's the market reacting? It was, sell, buy the rumor, sell the fact.
Buy the rumor the previous days because the USD yen has been rallying literally every single day this week, besides today.
I know.
And the day that we get the NFPs, we get better NFPs. And it's the only negative day so far, right?
Yeah.
I mean, that tells you everything you want to know. Yeah. Exactly. So everybody's like buying it because they believe NFPs are going to be stronger. NFPs are stronger, and now it's being sold.
And they'll say, the yen burned me. They'll blame it on the yen. Oh, I'm not trading the yen. It burned me. No, it didn't burn you. You you were wrong, which happens in trading.
To be honest, we've seen this.
It was no fraud,
Yeah, to be honest, we've seen this play multiple times before, so it's really no big of a surprise, right? Now, Blake mentioned before, and if you remember, I've said the same thing, so I totally agree with him. USD CAD remains very, very strong. So, you know, here it is, moment of truth for USD CAD. USD CAD is currently knocking on the door of this confluence of resistances. Previous highs here, so above here, we actually get a higher high, which we haven't had since we topped out here in the end of December 2018. So we get a higher high, and at the same time, we break through this triangle. Now, personally speaking, a couple of days ago, I drew two scenarios. I still believe that we might get these scenarios as a first one. I mean, we've already seen a decent rally from 129.50 to above 133. You know, we could see a little bit of a weakness, in which case, you know, you'll get the opportunity to load some before we actually end up retesting that confluence of resistances and then perhaps breaking higher. But one thing is for sure, breaking above this formation is going to be a very bullish event. And once we start trading above that, one of the pairs that will really be bullish the US dollar is going to be this one, USD CAD. So I do think that USD CAD is probably going to be a nice long, but we first need to take out this area. So obviously, I'm not advocating that that you should be buying after like almost a 200 pip rally right on top of resistance, right? But I'm stressing out once again that this is, you know, a very significant area for this market. And, you know, once we end up breaking above it, I think you shouldn't try to fade this move, because it is likely that this is going to be, you know, the real deal. Now, having to do with gold and silver, nothing really has changed here, meaning gold still holding this previous support. Keep in mind, though, that if you're looking, you know, to be short anywhere between 1570 and 1575 is a good opportunity to be short for a short-term trade. If we go through that, I think that, you know, we're directly going to new highs. 1625 is my next upside target in gold. And here is silver still consolidating within this formation. So far, the price action really looks corrective. So I would expect an eventual break higher and a continuation to the upside. As a long-term opportunity, I think that silver is probably even a better opportunity than gold, because gold is now trading not that far away from its all-time high, while that's definitely not the case for silver. I remind you that silver had topped out at, what was it, 50? Let's see, it was 49.5. So silver was trading at some point at 49.5. So as you understand, it's currently trading at like, you know, 40% of that. So I think that in the long term, if you're looking for long-term metal exposure, silver is a really, really good bet for more upside. Silver, don't forget, has a complicated role. It's not like gold, which is mostly a monetary metal, not only, of course, but mostly a monetary metal. Silver is more of a mixed bag. It's both monetary metal and an industrial metal. So, you know, it's not trading exactly as gold does, but as I said, I think that in the long term, it has more potential, you know, for higher upside. Now, of course, it's also more volatile, so it depends, you know, what kind of a, you know, instrument you're looking to invest to. Ramifications for phase one trade deal and strong USD. Probably I lost your previous message, Baruch. Let me go back in time. Hi, good morning to everybody. So USD yen to new lows, USD yen lower. Yeah, that's what he meant. 107.70 still achievable in USD yen. Yeah, sure, of course it is achievable. As long as we remain below that trend line resistance, yes. By the way, having to do, we have a question with USD Swiss, and thank you for reminding me, because I showed that earlier in the week. USD Swiss is actually testing, as we speak, this rectangle's trend line resistance. So, you know, the implications are quite clear here. A movement and a daily and weekly, because it's a Friday, so the daily close is also going to be the weekly close above this horizontal resistance area, is going to open up the upside for a move towards like 99 cents. So quite an important resistance the USD Swiss is currently testing. Let's see if it can actually break above and close above this area today. Until that happens, don't buy the resistance. It doesn't really make much sense, right? Dribbling for sign of the call on Wednesday. Hi guys, Euro USD please. Okay, we went through that. Easy money on USD long, guys. Okay. If you say so, FX trader. Well, when everyone looking for strong number, that's when you will get a weak number. We actually didn't get a weak number, but as we've already discussed, the market had already priced in a strong number, and although we got that strong number, the market has done absolutely nothing to respond to a strong number. I mean, if you just looked at the price action and you had no idea what the number was, you would assume that the number was as expected or even a little bit weaker. Look at the ADP was so huge, so payrolls will be huge too. Sure money on dollar longs. If that was your bet, you're underwater. I mean, if you bought today dollars thinking that the number is going to be strong and that is going to make the dollar move even higher, you're out of the money because simply the number was strong, but the dollar didn't move higher.
Hey, someone took away my banning power.
Great.
You guys did, didn't you? You did.
No,
took away.
actually, no.
Really? Okay.
No.
All right. Because anyway, I always had a policy, and we're doing this to help people, and it's free, doesn't cost anything. And the only two things that I require to hang out with us or me, wherever I am, is respect for our guests that are giving their time, even though it might generate business for them, and not to have anyone that's toxic rooting for others to fail and taking pleasure if they do to rationalize their own inadequacies. So I don't do 3 strikes you're out anymore. So if I continue to see this, I'm low tech. You're lucky, or someone else would be gone here today. But let me ask the crowd here, because we could text and you could see everyone's text. It says text all. If you agree with me that that's the type of community and climate you want to be in, give me a why. Because
I totally agree. I totally agree with you. But on the other hand, I have to say that I'm against censorship. I have no problem.
Okay.
Anybody that wants to be here and be, ironic or whatever, I personally
you don't care.
less.
I know.
No, I couldn't care less.
Yeah, we have
honestly.
different DNA. I'm an emotional person.
Yeah, I really
you're a rational person.
I mean, anybody who wants to have a discussion, let's
that's fine.
Let's share anybody wants to be like this, let's share P&Ls. Show me first your long-term performance, I can show you mine, and then we can discuss on real basis, right?
There you go.
Because I really don't mind. Nobody's on the right side of the market all the time.
I just recommend therapy for people like that, because therapy has helped me. If you're that angry and you're going to spend your time trying to harass people that are in a very difficult endeavor, then you're wasting your life doing that. So be constructive, turn that energy in trying to help people rather than being a critic. That's my philosophy.
Yeah,
and
Dale,
that's it. I rest my case.
You get more easily disappointed by people because something that's actually positive, because you believe in people more than I do, which I envy you.
Well, you know what? I envy you. So anyway, all right. I said my piece, and anyway. Thanks for letting me ventilate, but I want this to be a place where it's tough enough to try and pull equity out of the markets without having hecklers in the crowd. Okay.
As I said, it's okay. It's fine by me.
Okay.
No,
all right. Go ahead and heckle Steve, but once I find out how to ban people again, you probably won't be around for a while. So.
Okay, so
Go
we
ahead.
have a question about Kiwi CAD, and since we were speaking about Kiwi, I know that I'm currently showing Aussie CAD because I intend to show both of them. First of all, you can see it here. Aussie CAD has been in a downtrend since we broke through this symmetrical triangle. That was actually, quite a nice trade. Came back, retested that broken triangle, and we've been moving lower since. So as you see, despite both the Aussie and the Canadian being weak, the Aussie has been weaker. Now, is this the type of currency pair I would be looking to trade? The answer is no. And why is the answer no? Because it ticks one of the boxes. It has a clear direction, which is a great thing. But on the other hand, you're shorting weak against weak, betting on which of the two is going to be the weakest. Why don't you just pick something strong to, be long against Aussie or against CAD? Now, having said that, it looks to me like the Aussie CAD wants to move even lower from here. And if you look at the Kiwi CAD, it definitely looks much, much better. In essence, it broke through that descending channel. And, we had two ways. I had actually drawn that and I removed it. You have two ways to interpret this recent price action. First of all, you can say it's corrective because it's so far it has remained orderly, and this might be some type of a pennant. Earlier, like last week, I had shown here this head and shoulders formation, this one. I just didn't like so much how the right shoulder played out, and the fact that we were unable to actually break down. But if you take this, I mean, it's not beautiful, but it's still a head and shoulders formation. That points for a move towards 84 cents. So, based on the head and shoulders formation, the Kiwi CAD might still have more downside. Clearly, between the Aussie CAD and the Kiwi CAD, the Aussie CAD is a much better play for a short position, right? I mean, you can clearly see the difference in how bearish one looks in comparison to the other. But my advice in general would be, Aussie, Kiwi, CAD have been underperforming for quite some time. So all of them would belong if we just wanted to create two baskets, like stronger and weaker currencies during the past few weeks. You would put all three of them in the category of weaker. So, why trade weak against weak? Why trade strong against strong? Pick one weak, pick one strong, and belong the strong against the weak. It's going to give you much better, performance, right? Steve, my favorite USD long is USD Swiss. Yeah, I agree with you, Gautam. If we do close above this 97.50 area, USD Swiss is going to be good for 150 pips of upside. I think a squeeze higher in Euro Swiss can happen despite risk off. I agree with you because we know that the S&B has, has been in essence, holding here and keeping the pair from depreciating further. Now, you can have a look at this, small rectangle that we've been creating here. So I think that Euro Swiss above like 1073 might squeeze a little bit higher. And in that case, I agree with you, USD Swiss should overperform to the upside, Euro USD to the downside. So, but so far, we still don't see a breakout here. So it's just a stabilization, right? We met the 161.8% extension of the last rebound, and we've stabilized here. So stabilization doesn't really mean recovery. It just might mean, some horizontal consolidation. So I think in order for us to turn more bullish here, we need to take out that level, but it is a possibility. So yeah, I agree with you. USD Swiss above 97.50 should be good. Gold, somebody's mentioning gold. It was a few minutes ago. Let's see if gold has actually done something. Let's go to the short term. Here is gold on the 4-hour chart. So, gold had a spike lower to 1560, and it's now back almost at 1570. Keep in mind, this is what we talked about between 1570, 1575. A decent short if you're looking for a short-term play. I want to reiterate here. My long-term bullish thesis hasn't changed, right? I'm talking only about a short-term trade. You know, shorting against 1576 above the 61.8 is definitely a very appealing risk-reward opportunity because you're risking very, very little with the potential of seeing one more leg to the downside, which, you know, you can risk like $6-7 of upside to target $30-40 of downside. I mean, right, that's a 5-to-1 risk reward ratio. I mean, I would take that any given day. Steve, does Dale hold his position over weekend? Dale says in general what he does. Sometimes yes, sometimes no. Frequently, more frequently than not. No, he doesn't. Long time on a cruise ship, Thailand 2, USD BRL is impressive. USD BRL, okay, to be honest, I haven't looked at USD BRL in, I don't even remember how long. So let's have a look at it. That's the last time I actually looked at USD BRL when it was trading in this triangle. Yeah, it's at all-time highs, right? Yeah, and you know, it's not an exception. I mean, the USD is very strong against many of the exotics. For example, look at the USD against the Turkish lira. Not at all-time highs, but you know, definitely very strong. Keep in mind that the USD against the Turkish lira, like 10 years ago, it was trading at 1.4, and it's currently trading at 6. So you know, you can understand how strong it has been. Look at the USD and the move it has produced against the Singaporean dollar. By the way, keep a close eye to this area because we're now approaching, you know, very impulsive move higher, no question about it. But we're now approaching a confluence of resistances, you know, at around 139.50. We might see an initial reaction from there, but you know, when and if we break above that, you should expect a lot more of upside because this is a strong horizontal support resistance area. It's also the 61.8% fib from the January 2017 high to the January 2018 low. By the way, another example of seasonality, we've talked about it multiple times. Look at this. The multi-year high registered at the very first days of 2017, and then we bottomed out at the first days of 2018, and we haven't even tested that level again. So, you know, quite an important area of resistance here. If we break above it, you should expect more strength, but you know, I wouldn't be surprised to see some type of a pullback initially. Okay. So in general, if you see the US dollar against exotic currencies, it is performing well against almost everything. Let's have another example, USD ZAR. Here it is. USD ZAR headed once again towards this triangle's resistance. Needless to say that if we break above this, you should expect more upside. Okay. So yeah, no surprise that it's doing so well against the BRL. Oil long or short today? Listen, things with oil are quite easy to interpret here. The rebound was very, very weak. In essence, we never managed to close back above 51.50. And as long as that's the case, you need to respect the potential for more downside in crude. As simple as that. I mean, it remains, you know, under pressure, and there is no sign here that you should be long crude. How do you explain USD CAD move despite the strong number? You mean the strong number in the strong Canadian number? It's quite simple, actually. I mean, we did get a strong number this time in Canadian employment, but first of all, we also got a strong number in US employment, and second of all, despite today's data, Canadian data have been coming out very, very weak since mid-December. So I think the market has really started positioning for a breakout higher in the USD CAD. And as I said before, above 133.20, I wouldn't be trying to fade that because I think USD CAD can actually end up producing a lot more upside. To me, USD CAD looks one of the best pairs to belong the US dollar, at least from the more traditional ones, the more mainstream ones. So there is, clearly a tendency for the market to bid it up and take it higher. And I wouldn't be surprised if, if you told me, buy the dollar against something and, be obliged to hold it like for a couple of months, probably USD CAD would be my choice. Okay, Coach.
Buddy.
Why don't we wrap it up?
Great week.
Everybody have a nice weekend. Yeah, indeed.
Great week, and looking forward to next week. Have a couple of, well, they're all going to be good, but a decent lineup for next week. Peter Goodburn's going to be with us the day before Valentine's Day. On Valentine's Day, we're all going to be giving each other roses. And I have Alba, Albitomix, and the Wolf Wave, and she'll be here Monday, and a couple of new guests that we'll have next week. So I think that we're reaching some inflection points here, and I know everyone thinks I'm a little crazy, but I've seen inflection points on full moon, so looking for some reversals. And I know it's like crying wolf, but I still think the S&Ps, even if they have one more push to 3360 or so, it's so close I could taste it, and the implications are for a lot of continuation. And I just sat here listening to Steve's analysis, and when he started talking about the Singaporean dollar and what's going on, what's the Thai baht doing, that it kind of reminds me, although one was financial, that brought on economic weakness, of the Asian contagion. That if you look at any of the Asian currencies, that
the one that started in Malaysia, you mean, at 1997, right?
Yeah. I mean, the fuse is different, but the way the currencies are acting are similar. So anyway, so
I would agree.
Everyone have a great weekend, and get some rest and stay healthy, so that we can attack the markets together next week. And if you haven't become a subscriber, Friday is a good day to get used to navigating the platform. And light is great, especially if you have a job, because you're going to get all of the team's analysis pushed to you on your phone. And that's it. Don't just count your pips, count your blessings. I tell you what, here's a funny thing I'll end it with. I send out a prayer every day, but look at what this guy sent to me. So this is a trader's prayer. Our mentor in heaven, hallowed be thy name, thy strategy come, thy emotions be controlled on the live accounts as in on demo. Give us this day our daily pips, and forgive us from all our bad risk management, as we forgive those who gave us signals that blew out our accounts. Lead us not into stop loss, and deliver us from stop hunts. No, you're not going to be delivered. I'm the Forex stop hunter. For thy is the market, the leverage, and the sniper entries, forever in profit. Amen. You guys like that? That's the best secular prayer, trading prayer I've ever seen. Huh?
Good one.
Huh? All right, bro. Everyone have a great weekend.
Enjoy. Bye-bye.
All right. See everyone.